Welcome back to the Daily Journal. So, looking at Bitcoin's price action from Monday, 17 October, it's the New York session. It's this next 4-hour candle that we are looking to trade. So, bias is coming from not only the 4-hour charts, but for anybody who's been watching my top-down analysis or in the community, you'll know that I've been bearish since sweeping the previous quarterly highs and getting this change in state delivery on the weekly. And my targets have been the monthly fair value gap, the yearly open, as well as the CME futures gap, which is inside this weekly fair value gap. All right, so going into that session, I'm bearish. Going into that day, I'm bearish. Going into this week, I'm bearish until the CME gap is hit. And here's the thing, this low is sitting just above the CME gap. If you go check out the CME chart, you'll see I think this low just sits above it. Okay, so let's read price action, what I expect the next 4-hour candle to do. So looking at this previous week low, we traded into that, we created a swing low here, and I would need to see a close above this in order to flip bullish. But you can see it's starting to act as resistance, and that's because you're sitting inside of this order block, which is high probability because we've had a sweep of liquidity here. So this is the resistance. So going into the session, the start of this week, we've just taken our sell side. We've now traded up into resistance, but of course the CME gap sits just below. And the fact that this stopped just above is what we call inducements. So dropping down to the 15-minute charts, my eyes immediately go to the Asian range low. We're sitting at resistance here, so let me just clean this up a bit. And of course, this is a range sitting inside of London. Okay, so we got buy side sitting above. And that's inside that 4-hour order block. And of course, we got plenty of liquidity over here. We got relative lows. We've got some inefficiencies in the form of fair value gaps. But of course, the main drawn liquidity here, since I'm bearish, I'm expecting further downside. It's the CME gap, which is a high time frame drawn liquidity, with the Asian range low sitting just above that. So it's a high time frame and the low time frame that are sitting right by each other, and that's what you want to see. So when we draw up the 9:30 open, let's move price forward to see how things played out. Okay, so dropping down into the session, into the New York Open, if price continues to drop lower into this Asian range low, I'll be bullish and I'll be trading up to these relative highs from London, right? Because you most probably tap into the CME gap, you've taken out the Asian range, you've taken out the previous week low, and you've got, first and foremost, low-hanging fruit. But let's see what price does. Okay, at the open, price trades up immediately into the London buy-side liquidity and closes well below both the liquidity as well as the 4-hour open level. So since my bias is to the downside and we've taken out buy side at the open, this is just, I'm immediately looking at the sell side liquidity, which has created relative lows with the CME gap and the Asian range low. So for me, what I'd like to see ideally is a second sweep of liquidity. But since this is the New York session, you can expect a V-shape reversal, such as the New York reversal profile. So let's see what price does to see if we can come and sweep up these highs, and if not, on the correlated pair. Okay, so we're getting some resistance there. We went into a fair value gap here in this order block, so I'll expect price to go higher if it's going to trade up into this, take out this high, or we can use this wick as an inefficiency, and you can grade that where we don't want to see price close above the 0.5. Okay, so there we are. We've dropped lower, so let's go look at the correlated pair because, okay, so there's Ethereum. Let's use the wick. Fantastic. This is the 0.5. We haven't even been able to trade up to it. The 0.25, the body candles have closed below. And we've swept these highs, whereas Bitcoin did not. Okay, great. So we've got SMT. So we're on the right pair to trade because the weakness is over here. So there's your SMT. We then closed beneath this low that technically swept that high. And this is, close beneath this level is your trigger to get involved. Of course, you can just use this level. And we've also closed with a fair value gap, and that is what we can use for entry. Okay, so my stop loss will go at the sweep, which is technically this, since this is SMT. And this is the low-hanging fruit, which is a 3-hour trade. We don't need to catch this. We can always leave a runner. And of course, it's the 10 a.m. open now. So what we'd like to see is price trade up into, at the open at least, make the wick of the 4-hour candle. Of course, this will be different on the perps chart versus the futures. So we just change this to the 1-hour chart, and it'll give us the same candle, 4-hour candle open as if we had it on the futures chart. So what I like about this 4-hour candle closing, it's closing obviously bearish, having swept high time frame liquidity. Also out of that, or off that 4-hour order block. Okay, so fantastic. Now we're going into the open, and we're going to open bullish, which is exactly what we want to see, because we're going to form the wick of that next 4-hour candle, which is the 10 a.m. So this is going to be 10 a.m. continuation. And if I didn't get involved at this point, when price trades beneath this, closes beneath that, having moved into this fair value gap, especially at the 10 a.m. open, that's reason to get back in. So let's see if we get a close even better. Did we sweep that high? Doesn't look it, but did Ethereum? It didn't either, but that's okay. It doesn't matter because it just got rejected from this fair value gap and it closed beneath this. And you can use, well, this didn't actually sweep it. So I'd use this. Either way, you would have had to have used this candle closure because the previous one didn't close beneath any of those levels. So if I had have missed that and I wanted to trade the continuation out of this fair value gap, I could get involved there. You might as well pop it there. If it does come up, it is what it is, but we're just going for this low-hanging fruit. If price is going to come back to these equal highs, which I'm sure it will, it's going to come take out sell-side liquidity first. Remember, this is our drawn liquidity, the high time frame. But since we're on the 1-minute charts, we can't get greedy here. If we want to trade down to these low levels, our stop loss needs to be above at least, these highs or that. So let's just see how that plays out and see the expansion on the 4-hour candle. Okay, nice, and it's selling off lovely there. Okay, will our stop loss hold? Okay, just fast forward this, yep. And there it is. Cool. So there's a nice, okay, that wouldn't have really been worth it. And you would have been better off just waiting for price to trade into, looks like you could have used this order block. And that would have actually been a really good trade. It wouldn't have been my style though. I would have used this fair value gap as my, the entry that I took there, that's what I would have done. But then again, it would have been for 1.4 hour trade. And then you can just set your limits and demand more from the market and require price to trade into this order block to get a 3-hour trade, which is really lovely. So 2 different options, both 3-hour trades. I prefer to have traded this and would have been lovely to get a markdown. But look at this market maker sell model. And that's a market maker sell model inside of the 15 minutes. But let's see if that actually plays out. Okay, there it is, lovely. Fantastic. So both stop losses would have held, even if we had held for the high time frame drawn liquidity. See you guys in the next one. Cheers.